Hello, Warriors. Hope everyone had a good holiday. Just want to caution people tactically, we do have the NFP tomorrow. So you guys know how I feel about red numbers. So tactically, if you played the 3 drive to a top in USD SEC, not a bad time to at least be booking half, especially in front of NFP. Because on the 1 hour, starting to not confirm, maybe this is 1, 2, 3, could continue because I don't think it's over. Basically because this isn't over, right? Dollar's still acting ugly, but back towards this, last time we got into this level, we had a big pop, so maybe we hold here and get another pop, maybe 1/3 the magnitude of this. Okay, on a strong jobs number tomorrow. Everyone with me? Hi, Paul. Paul's in Buckeye Country, Ohio State. Did you go to college there? Great school. Everyone doing okay? You guys understand that, in front of the NFP, if you have some windfalls, and remember, if you have windfalls, don't get sloppy. I tweeted about it this morning, that sometimes we get sloppy, we have some hubris. Oh, thank you, Simon. Nice to see your name in here. And then you think, then you rationalize it, you start, getting into some trades that don't work out, and then you go, oh, well, it was the house's money anyway. Well, it is, and if you act like that, was yours. So just something to think about. The pop that we had in the metals could continue with the weak dollar, but like anything, you don't chase anything. So gold, maybe you get some type of retrace. Probably have a lot of shorts stuck here after this turn. Silver, not as strong of a pattern. So I could even allow for one more low in silver unless we get back over 1610. And that should bring us to some of the stock indexes. We had a pretty negative day on Tuesday before the holiday, and NASDAQ's the weakest on this recovery. I still think there's a chance for us to trade up towards 2752. That's an area of interest for me. NASDAQ looks even weaker, but I'm thinking up here around 7180 would be a nice zone in the next several days, maybe next week. And I think that's, Euro still looks all right, having a decent day today. Talked about buying pullbacks to 1620. It got down to 1590, but that was a pretty good entry. You have decent money made here, over 80 pips. Looks like a 1, a 2. But, it's starting to look like we get some type of ascending triangle here in the Euro. Say we start breaking out over 1720, 1520, and 1720 gives you 1920. So I know even Greg was talking about an alternate account, and a lot of people are looking for maybe 120 for some type of right shoulder. So anywhere between 118.80 and 120 still looks viable to me, especially if we get through this 50-day here at 17.5. But threatening kind of an ascending triangle breakout here. You have this flat line here, and you have an ascending line here. So that would take it above here. I'm sure every Euro bear that's left, looking for lower numbers now, there's got to be a lot of stops over this was the high of the ECB day right here. So the grand prize for the algos are up around 118.52, since still another 130 pips from now. What's the almond, Tish? I know it's a pair. It looks like I'll have to get back in the chat room to learn your lingo.
It's the USD MXN. It's the Mexican peso.
Okay.
From Salma Hayek, you know, it's
yeah.
as you said, it's our chat room lingo.
Yeah, well, that's, you know, if that's what it is, I'd probably pay more attention to it too. Let's see. 3 drive, what time frame? 4? Okay, let's see. You're saying 1, 2, 3? Maybe.
Hey, Coach, are you there?
Yeah, hey. How are you, buddy?
Hey, how's it going? Well,
Good.
I slept in this morning.
Good. Good. You're probably
you know,
watching. Where'd you watch the fireworks in Scottsdale yesterday?
Just our backyard. But you know what happened is I turned off my alarm so I wouldn't get woken up by my alarm yesterday, and I forgot to turn it back on last night. So.
Yeah, I did that too. I remembered.
Yeah.
I'd be. Well, how did you wake up? Your biorhythm woke you up?
Oh yeah, body just naturally woke up. Yeah. Yeah. So, hey, sorry I was running a little bit late, and I'm just kind of getting caught up everything, but we are just about 10 minutes away from ADP, so we got private sector jobs that are coming out.
Yeah, and that kind of gives a pretty good clue for what we're going to see tomorrow, doesn't it?
Well, yeah. I mean, I would think that it's going to give us a good heads up. What we might see out of the non-farm payrolls. The one thing that you know we have to take note of is that the numbers have been consistently stronger and good, and it's not like I think we should. I think that you can see that actually in the dollar yen. The dollar yen has been a little stronger alongside with the equities, but surprisingly, as equity futures are actually a lot stronger this morning. We got S&P futures that are up about 3/4 of a point. The dollar yen, I mean, it's up a little bit, but not a lot.
It could be a failing rally. That's all bounce here.
Yeah, it could be.
So, yeah. Anyway,
so since you've been awake for a while, and I'm just kind of starting to look at charts. What have you been looking at this morning that you see?
Well, you know, because of NFP, I think if you have some dollar short positions like USD SEC, that you book some. Even though I still think the dollar's headed lower, you know, we're at some pretty major support. That's where the last big rally happened right here, Blake. So, you know, I'm not looking for anything like this, but if we have a decent jobs number, why can't we rally back to here before we finally break down? Because big picture, it looks like 92 is in the cards here, on the down here around 92. So that would leave the door open for what, about 119, 1880 to 120 euro.
Yeah.
But you know, I know I'd rather react to the NFP than hope that the number goes my way.
So one of the things that I think, just, you know, again, this is me just popping in and not having my normal time to prepare ahead of the numbers, is that the euro dollar, I mean, is coming right up to the 117.20 level, which is a really key resistance. I put in a pattern in play on the pound dollar yesterday, and I actually got long the pound dollar at 132. Personally, I bought it at 132.30 yesterday because we came out of an ascending or a descending wedge. But you've got dollar weakness that is coming right in. Surprisingly, that we see dollar weakness coming into this this number. But all of this is all yen pairs that are stronger. You got the euro yen, the pound yen, and even the Aussie and New Zealand yen are stronger this morning too.
Yeah, you see that line at 1720, so it would measure close to 1920 if we took it up.
Yeah, and remember that's also the 618. Remember the week ahead video from 2 weeks ago?
Oh yeah.
Yeah, that's that exact same price.
So I actually think that provides relief for stock indexes. That,
Yeah.
you know, I think that's part of it. A weak dollar, a pop in gold, kind of like reflation after just having deflationary moves, you know. So I think the S&P rally lasts as long as this dollar weakness lasts. I think that's a possibility. But the next time the dollar turns down, I think is it's going to be a pretty hard break for S&Ps, especially if they're not making new highs when that happens. So just my views.
All right. What else do you see that has your attention this morning?
That's really about it. I mean, it's tempting up here in crude with all the noise up here, and Steve had some important stuff a little bit above 75, but I think crude is well overdue. Maybe we get one more high, and the RSI does not make a new high, but you know, always looking for the strongest thing to short. Strongest thing on the board right now is crude, but I think it's overdone, and I'll be looking for reasons to sell it, or at least a rally back to, you know, 71 or 70. This was a pretty big area, so I see that happening. I think the gold bottom, but silver may not have, and not for anything huge, because when I look at silver now, I could actually make a longer term case for like 14.5 to 14 off the
Really?
weeklies. Yeah, I forgot where I had those lines. I think it was it's a different set of charts. So yeah, and gold too. So, you know, gold could you know, next time through the trend line that we had a false breakout in, it could be pretty vulnerable. It could be, you know, $80 from there.
Wow.
Yeah. So.
I see as the price action being fairly constructive, but here,
Yeah.
let me grab the screen, and since we have this ADP coming out here just moments from now, the big one is the dollar yen, and by the way, I do have a short on the dollar yen. I'm back to break even. Well, actually, I'm back to break even because I actually have added to it. So my addition is up at these levels, but and I'm going to stand in as long as we trade below this 111.20. There's no reason for me to really cover it. We have bounced up because equity markets, excuse me, have bounced up as well. But you know, there's been a pretty tight consolidation since yesterday, and this rally here is all because futures are higher right now. But we're going to keep an eye on the dollar yen going into the ADP. But really quick, so here's the euro dollar back at this is the 117.20 level, really important resistance. And you know, if this is a weaker number, which the market is looking for a stronger number than previous month, we're looking for 190,000 on ADP. Previous was 178,000. If we come in at, you know, anything less than 190, I think, you know, 180, we're challenging this. We come in at, you know, below 180 or 180 towards 150, we might actually trade much higher. So this euro, and I have no euro longs at the moment, but it's something that I think is going to be really important as we make our way up there. This is that descending wedge, just so everybody's aware, the descending wedge that we've come out of in the pound dollar.
Oh, and Lydia will be here today.
Oh, that's good. Oh, well, you know, after seeing such a big move in the cable lower, let's go back over to the dollar yen. After seeing such a big move in the cable over the last couple months, it's going to be interesting to hear what her take is. Yeah. So, okay, heads up, guys. We have 5 seconds. Here we go. $177. So it's a little weaker. Dollar yen is falling here. It not too bad, but it was kind of weakening into the number. So I haven't seen any revisions. Now the prior number was 178,000, and we came in below the prior number. So it's not a strong number.
But you know what? The 10-year yield, 30-year yield hasn't moved. They're up like 3 and 2 ticks each. So, you know, I don't know if they just don't have immediate responses, but they came in up a few ticks and they haven't moved. They're still up. But Euro looks like it wants to challenge that breakout area now.
Yeah, I mean, we might.
Yeah.
Stocks aren't phased. Actually, NASDAQ futures just hit new highs. The cable's about ready to hit new highs on the day.
Weak dollar, buy everything. It seems like strong dollar, sell everything.
Yeah, that's possible. We have seen that relationship as of late. Yeah, let's see. There's the Aussie. There's the Kiwi, Canadian. Oh, the Canadian. This is we're trading below the 131.30. So the 618. Here, let me move these blue lines. These blue lines are very much what I'm looking to do. But
smart to be patient. I know you had a position on, you didn't feel it was ready, and you know that. I watched that in people, and you know you're very flexible. You thought there was more downside, and you know more than willing to, when you get more information, reassess and adjust your thinking. So
thank you. Yeah,
it's going.
I'm you know, it's a shame because I did. I mean, I'm longer term very bullish here. You know, I'm still expecting us to go a lot higher, but you know, with what we're seeing with dollar weakness, this could very much play right into the dollar Canadian back into the breakout point. So I'm a little bummed out that I had to, you know, I have to reestablish a position versus it going straight from, you know, a lot of times when I see these big breakouts, you get an immediate move from, you know, in this case was 130, 130.50, 131, and it you know, if we had some dollar weakness or a dollar strength as a tailwind, this pair would have been trading up at 136, you know.
Yeah,
but we just didn't have it, and it's a shame because I really wanted to play this much higher initially, but that doesn't mean that we can't, that we won't get an opportunity. I'm actually at this point in time, I'm a little worried that dollar weakness is going to be more of a theme across the board, and we're going to need a catalyst of Canadian weakness to get this thing really moving higher, but I don't know. But anyway, so there's the Canadians pulling back.
just lost you, Blake.
Did we just lose Blake? Blake?
Yeah, can you hear me?
We lost you for like 10 seconds completely.
Yeah. I can tell. Beat. So sorry about that. All right, I should be up now. I don't know what happened there.
Yeah, we can hear you. We can hear you.
Okay.
Mate.
All right. That's good. That's good. Yeah, it dropped off for a second. So I was talking about the dollar Canadian. Just taking a look at everything else really quick. Here's the dollar Swiss. We're still consolidating in this, you know, triangle type of pattern. US dollar Norwegian krona. We're getting a little long in the tooth here as far as our head and shoulder pattern. So we actually have to start breaking down now in order for that to really play out. Ooh, wow, gold just went positive, by the way. And gold, for those of you that haven't seen it, okay, I have an AB equals CD. We basically stopped and reversed at this big multi-year trend line. So with that weaker number, gold's getting a lift. Here's silver. I'm going to let Steve cover all this stuff, but here's silver. I think silver, if it gets right back over 116.50 or 16.15, that'll be pretty bullish for the silver market. Okay, let me go back into the, here's the Swedish krona, really big reversal in the Swedish krona. Somebody called this a 3-drive, and I'm going to confirm that with Dale. But we have these rallies, these continuous rallies higher, but RSI wasn't matching. So, whoops. So we had a bit of a 3-drive. And the US dollar Mexican peso, this has been a really big failure here. We broke below the 50% retracement. This is following the elections, and the dollar peso looks like it's going to come down to the 1905, 1907, the 618 right here, this little breakout point, and the dollar Mexican peso looks extremely weak. This is one of those other currencies that is really feeding into, uh-oh, watch the euro. Here's the euro challenging this resistance. I'm happy about it because I am long the cable. I am short the dollar yen, so I'm happy with this move that we're seeing right now. Let's see something really fast. Wow, dollar's really coming under some pressure here. So without talking too much about the cable, knowing that Lydia, who's Faith might, who will talk about the pound. So the cable in the last couple of months, we've gone from 144 to 130.50, basically. So now we're starting to see a reversal back towards, we're coming up to the 200 period moving average on the 4-hour. The 24% retracement comes in at 133.60. I mean, this is really oversold, was really oversold. So even a minimum bounce, a 38% retracement will take us back to 135.57. And also the 200-day moving average is really close to there as well. So the 200-day moving average comes in at 135.85, or basically 136. So having the pair get back to the 200-day moving average wouldn't surprise me in the least bit. Here comes the euro, new highs. We are at that, coming right into that 618. I would not want to be short the euro right now. I don't think there's a lot of momentum behind it. It's going to be tough resistance, but if it breaks through it, hold on really quick. This is another big resistance in the Kiwi right here. So remember, as far as the Kiwi goes, What?
The previous time frame that you had on the Kiwi, Blake? What was it, a 4-hour?
Yeah. It might be an inverted head and shoulder pattern here. But the reason why this is so important, in my opinion, is that we had this big false or a big breakdown on the weekly charts. And if we close higher this week, so if the Kiwi closes above 68 cents, that's going to be a false breakdown. It probably got a lot of people short the Kiwi, and then that's going to set up for a massive squeeze. And this is one of the things that really makes me nervous about being long, like, for example, the dollar Canadian. I think the dollar Canadians, I really want to be long, but when I see things like this, and I see like the cable rallying, the euro dollar pushing higher, it all really makes me very nervous about trying to be long the dollar Canadian. So yeah, there is a little inverted head and shoulder pattern here right on the 4-hour. You bet. Right through here. Whoops, I don't like that. So you guys can see this. Here's the shoulder. Yeah. So yeah, good look, Steve. So matter of fact, Steve is here. Good morning, Steve.
Good morning, mate. I hope you you enjoyed yourself yesterday.
I actually enjoyed. I enjoyed myself. My sleeping in more than anything. No, we had a great 4th of July. We had about there's about 20 of us at my house, all family, and I played, I think, 3 hours of Marco Polo in the pool with the kids.
Nice.
and the nephews. Yeah, it was a great workout, and I think that's why I slept so well. So
Absolutely, absolutely. You know, physical. One of the big problems with you know, humans nowadays. I mean, us that live in cities and work on a desk, is that very often, you know, the mental fatigue does not align with physical fatigue, because you know your mind gets tired at the end of the day, but your body isn't tired yet, and that's what also causes many people to have insomnia, etc. So a nice workout definitely helps you sleep much better.
yeah, yeah, definitely. It was it definitely wore me out, and then plus I played golf actually the day before, and it was 100 and I don't know, probably like 108, 107, and boy, that wiped me out. Very, very tough, and it's tough on your body when you are accustomed to working in the air conditioning, away from the heat. Yeah. So anyway,
So the million dollar question is, real moves or another fake start for a move lower in the dollar? What do you think? Because we are seeing a lot of potential breakouts, but you know, we've had several false starts lately, haven't we? It's been a tough month last month.
Yeah, I mean, I look at this. This is the way I see the dollar index right now, and we do have I think the risk here is a double top in the dollar index, and so we're at the neckline. This is what I would consider the neckline. Let's disregard these this channel here, which it is the way I think we have to be aware of it. But if you disregard that and you look at this, oops, let's do it this way. You know, this being the double top, right? Here's your neckline. Okay, so that measured movement in the dollar index, if we break down, takes us to 92 and change, so 92.75. So, and then this would be the next support that you'd have to be aware of, I think, you know, on the way down. So, you know, we might find some support at 93.75, but the dollar looks weak. The dollar looks like we're going to challenge sub 93 level, and it makes a lot of sense regarding, you know, the trade war / trade dispute that we're seeing. I think that's what we're, you know, I think that's all very realistic. By the way, we have initial jobless claims coming out here in just a second, which shouldn't move the market much, but you never know.
Not really. Not
no,
really.
I mean,
unless it's a huge miss or bit, yeah.
I think there was some tariff news, guys, that Europe was going to reduce tariffs on U.S. cars, and the autos are strong, huh?
So not make them as strong as the market thought, possibly.
Well, Merkel, no, they already have. Go ahead, Steve.
Merkel actually made some kind of a statement that didn't have to do with the U.S. She said like that they would be open to reducing the tariffs on imported cars in general. So not she didn't specify the U.S. She meant from any country. Obviously.
231,000, by the way.
So it's exactly as expected, Blake, right?
Yeah, I mean a few thousand higher, but it's not nothing.
Yeah, but it's
until we're at 300,000, I don't even worry about that number.
Really. Well, the U.S. is their biggest import market, so I assume, you know, it's implied.
Yeah. Okay, so
So that makes Trump look like a great negotiator.
This is actually kind of a big discussion because personally, if you want my opinion about Trump, and if you remember,
No,
Dale,
just about
no,
that.
I mean about his economic. I mean about his economic policies. I don't mean as a person.
I just mean he wanted tariffs reduced in Europe. That's why he threatened tariffs on European cars. So if she's caving on that, I'm sure he'll consider it a victory.
Well, yeah, for sure. But
And
in
GM
general,
and all.
in general, I think that tariffs, one way or another, cannot actually benefit anybody. So whenever we see trade wars, there are no winners, right? But if at a war that, like most wars, don't have any winners, because a trade war is actually more or less it's similar to a regular war that at the end you might have a winner, but everybody's going to be harmed more or less. But regardless, let's consider who's going to be losing the most if we do get a full-blown currency war. Which is the country that has the larger trade deficits at the moment? The US, right? Why is that the case? Because the US used to be a manufacturing economy and it isn't anymore. It's a consumption-based economy, right? So who pays for the tariffs? Who pays for the increased price of the products? Who gets hurt more? The seller or the buyer? The buyer, actually. Who is the buyer? The buyer on the vast majority of the imported products is the middle American, right? So by buying products more expensively, who has more to lose, right? I mean, tariffs simply will end up reducing the disposable income of the average American. And it is what it is. I mean, it's simple, pure economics. You can't work around that. So
No, but he's just maybe using this for like leverage, and he got the Europeans to that would not have normally thought about lowering their tariffs on their cars to consider doing it.
Yeah, I'm just telling you that if he actually uses the threat of tariffs as leverage, as you say, and we just stay at the level that Trump threatens using potential tariffs, and we actually end up resolving the situation, the U.S. gaining some advantages that it didn't have, and dropping the issue altogether at the end. That's going to be great. It's a great tactic, and the result is going to be positive. But if we end up having trade war and tariffs, definitely the U.S. and the average U.S. citizen is going to be the party that's going to be losing the most.
Oh, we'll get punished, absolutely punished.
Yeah,
and it's going to.
We lost you again, Blake. We lost Blake. He obviously has some issues, but regardless, until we get him back. Hey, Blake.
Go ahead.
One thing that is very worrying here for those that are noticing, and I think it also shows what the market is thinking about the U.S. And Chinese issue.
Global economy. Yeah,
is what's happening with copper, right? Because we were talking about double tops before. Blake was showing a potential double top in the DXY, but how would you call this in copper, Dale? Isn't this a double top?
Sorry, guys. I need to reboot my router. I'm having internet issues. So,
absolutely.
Good luck, guys. All right. See you guys.
Absolutely.
Thank you.
See you, Blake.
Bye-bye. So,
Dr. Copper. Yeah.
Yeah, if you remember, Dale, we were very adamant about 294 being the line in the sand. And, we got this huge move after getting rejected from the previous high. This is a textbook double top. And we already had a very, very solid, well confirmed bottom in this range, the 294. And we're actually now breaking lower. Now, the next target, as I had marked here, would be here to 272 because it's the next area of support. But actually, if we want to extend this range, so if we want to talk about a measured double top target,
245.
That would be down here, right, which is at 257 roughly, right? So that would be the measured target for copper, and definitely that's not, giving very nice signs. And look at the RSI. The RSI is currently hitting low 20s, which more or less confirms this low, even if we actually rebound from somewhere here. So this is something
intense selling pressure. Yeah,
it is, and this is something I'm paying close attention to. Let's also extend this trend line. It might
all bull markets are roofed in copper.
That's a good one, actually. Yeah. Now, having to do with the DXY, very briefly, if you remember, Dale, Blake is looking at it as an ascending channel. If you remember, I was looking at it as a wedge and as a free drive. And I remember that we had a conversation. You told me, but this is like it's not a new high. It was actually an exact double top. I mean, both the highs were at 95.53. Yeah, but I told you that, listen, if you look at the line chart, right, which takes into account only the closing prices, actually that is a confirmed free drive, right? Yeah. So I was looking for a move lower. Now, the first area I would be looking for support is the extension of this ascending channel. Might act, the previous resistance might act as support. More or less coincides now with these lows here, so it's a double confluence of supports. And below that is going to be the 92.70 area. You can see why it has acted multiple times as support resistance in the past. So yeah, I do see a good potential that we're going to have more weakness here in the dollar. I do like cable breaking out. I had actually made an attempt of buying a little bit of cable before, but it actually produced one more low. Now I'm waiting to see if we're actually going to clear this 132.80, 133 area, because as you see, this is a horizontal area of support resistance, but we've already broken above this descending wedge, and RSI was already diverging on the daily, so the signs were there. And on the other hand, we had a euro that did not confirm the new low that the cable gave us, because instead of producing like a descending wedge, it produced a triangle that had a that had a horizontal support. Actually, we are breaking out of that as we speak. So I showed this on the chat room like an hour or more than an hour ago. I said, let's see if the euro is going to actually confirm this move that we're seeing higher. So far, we already showed on Blake's chart that there is a potential inverted head and shoulders formation in the QE. Of course, that is not something that produces some kind of a huge target. I mean, the target is less than the first area of actually stronger resistance, which is at 68 cents, 68.7 cents to be exact. So I would be looking at that area as resistance. And the Oz is also struggling here, but it does show some signs of a rebound. In case we do that, in case we do see a rebound, first area of resistance to be looking for is the 75-cent area. As you see, the RSI was also diverging here, so we had some indications from the RSI. Let's have a look at the CAD as well. As you see, the CAD, this is what I was looking for. I was looking for a rejection for the CAD and the move lower towards 130, 130 as a first target, but most likely the 130 area, confluence of supports, previous trend line resistance can act as support from this point on. Also a horizontal area of support, both at 130 and the 50 DMA is now there, the 50 simple moving daily average, right? So I think that 130 looks appealing. So we might actually make it to that level. Now, obviously, I understand why people would want to look for opportunities to buy the USD CAD, but I don't see the trigger to do so yet, right? As I said, one more move to the downside looks extremely like it. Now, having to do with crude, I actually initiated like a pattern in play in crude because we had we broke below this ascending wedge that I was monitoring, and then we had like a huge move lower within like 2-3 hours. So it took us all the way from almost 75 down to lower than 73. I got triggered actually the moment we broke here at 74.30 was my my entry point. So I was monitoring this as a possible ascending wedge. When we retraced back, I initiated a pattern in play because the reward to risk opportunity, was extremely appealing to see one more leg to the downside. This can still be the case, but I have to say that the longer it takes for it to break down and the longer it doesn't break down, there is also the potential that this is a larger ascending wedge, like something like this, right? So I wouldn't be very much surprised if the market produced one more high here, something like this, before then moving lower. So this is also a possibility, right? Catching a reversal is not like a 60% or 50% or 70% game, right? It's a game that, best case scenario, your odds are like 40% or so, right? So you have to be ready to be wrong at least once. So when you're trying to catch a reversal, the key is having an extremely appealing reward to risk opportunity, right? So for example, the trade I initiated was like roughly being short at 74 with a stop loss above the high, which is at 75, 25, let's call it roughly. And the target was 71.5. So, there is obviously a very appealing reward to risk opportunity here, right? So if this gets invalidated, and we do stay within a potential ascending wedge, and we do have another high towards 76, I'm going to give it a second shot. Actually, I have absolutely no problem doing that. It is more than obvious that the move higher, which if we measure it, you can see crude moved. Just look at this. Crude moved almost 19% higher within 16 days, right? So that's like a huge move. Crude on average was moving more than 1% higher per day. And that for more than, for actually 15, 16 days, which is more than 3 weeks, since, weekends obviously don't, during weekends it doesn't trade, right? So I do think that we are seeing a clear loss of momentum. And I do see that even if we push higher once again, crude should fail for a corrective move lower. Right now, if we do push higher once again towards 76, then I will be looking. My target is going to be down at 72.88, which is the previous high here as well, as a downside target. Now, if we do move lower from here, as I said, 71.50 is my target. Now, taking half at 78.88 would also make sense, right? Let's have a look at the metals, because gold, I want to show this as well. Gold produced a very nice rebound. It produced 2 days ago an outside white candle. This is quite a strong reversal indication having to do with candlesticks. And what makes it even more important is what was the exact level that this manifested. And that was actually at the previous low that we had here in December 2017. It was also exactly on this ascending trend line support. Now, this was a big candlestick and potentially a reversal candlestick. But how do we confirm? We do need to see the metal break above 1260. You can see here why, right? So before looking higher towards this channel resistance to begin with, I would want to see a break above 1260 and the daily close above it. That would be the second step to confirming that something is brewing here, something that might lead the metal to further appreciation. Same deal with silver. I mean, produced like a tweezer bottom. In this case, it wasn't an outside white candle, so a less bullish candlestick, but still an outside, still an possibly reversal candlestick. But unless it breaks above this horizontal support area, support resistance area. In this case, it's acting as resistance, and also this broken triangle support this time acting as resistance. I wouldn't be jumping the gun. I'm long 1/4 of both of them, and I'm almost back to break even to both of them. So I was long and I'm still long, and I was out of the money. Now I'm close to break even. But regardless of being long 1/4 of a position each, I'm the one telling you that they're not out of the woods yet. So, because if we do see a rejection from current levels, that's probably going to lead to a bearish continuation, and that's when I'm actually going to cut off my positions if I don't see some kind of a progression to the upside from current levels.
Gregor's here, bro.
Hey, Gregor, welcome,
Hey.
welcome back to the party. I know that we had unfinished business on Monday, so it's nice to have you back, so you can resume and show us more stuff, because we definitely didn't have enough time to cover everything we wanted. I'm passing you the screen.
Nice pass.
By the way, Coach, my sound and connection and everything was okay today, right?
Yes, yes.
Okay, cool.
Okay, so you see charts? Yes.
Yes, yes.
Perfect. Okay, so you were talking about crude oil.
Yes, mate.
And-
I actually shorted it on a break of I actually shorted it at 74.30 when it broke an ascending wedge, looking for a corrective move lower. It moved sharply lower, but I didn't take any profit, so I'm still in the position, and I'm hoping for one more move lower. My target is 71.50. What do you think about that?
Yes, it's very possible to see at least 3 waves of decline. But the idea is that this is still only a corrective pose. So what you should be aware is that this could also be actually a running triangle as well, in a way forward.
Yeah, I said it before.
73.50, I think there's a chance that it will continue higher, because I can easily move this here, wave 3, and wave 4 here, and you can see that then this could also be a triangle formation. So
Actually, Gregor, that's exactly what I was talking about. I was talking about that I would expect a break lower to happen sooner. So obviously, what I said before is that the more time passes and crude doesn't break lower, I do see the possibility of one more move higher within a larger ascending wedge, in which case I'm going to get stopped out, but I will more than gladly add higher, looking for a move at least towards the previous breakout area at 72.88. So if we see a move towards 76, I will be sorting again, looking for 72.88. That's my plan, actually.
Yes, but actually we could start to see acceleration to the downside, yes, if we see, as I said, break of these swing lows at 73.50. But the overall trading in a wave 4 is still quite dangerous. So what I personally looking at is waiting on this wave 4 to complete, and then maybe look for new opportunities if we see lower prices. If we just move straight to the upside, then I would just stay aside. But clearly there is room for 76, maybe even 78 if we see an extension higher into wave 5. But we should be aware that we are tracking a 5th wave, final leg of this advance since 1 year back. So after this very sharp corrective wave 4, I still think that much bigger corrective retracement will occur, which may take, as you know, prices back to the areas of a former wave 4, which is still at $60 and up to 63 at this stage. So market will not just simply continue to the upside with the same maneuver. We will definitely see some pullbacks coming, and especially if the dollar, which I think it has room for more upside, then in such case this could limit upside on crude oil. So if we take a look on euro dollar, I still think that we are just consolidating here around this 2017 trend line. It's important trend line, also above. We are above 1550 here. So maybe we are going to see an ABC rally for wave 4 up to this 200-day moving average, which could react as a resistance if tested, or simply will just stay in a contracting range here to make a triangle for a wave 4. But in either case, I think that we are in a corrective movement, and that sooner or later this floor will be taken out, and once this happens, expect quite sharp drop in the 5th wave of wave 3. So overall, I think that there's a little bit more time needed to see dollar gains, and tomorrow when we have non-farm payrolls report, maybe we'll see some limited upside on a spike towards 1750 up to 17 up to 18 actually.
We also have Fed minutes tonight, so theoretically speaking, that can also be a catalyst for a move in the dollar.
Yes, exactly. We are already here. If we take a look on the hourly chart, I'm looking here at this equality level. So I took distance of the first leg here, which I marked as a W. So it was actually ABC. Then I marked this as a wave X. Now we are again making another ABC, moving into these higher prices at 1730 to be exact. We'll see temporary resistance, and maybe we'll see just a spike to the upside, and then watch out for potential reversal lower. Also, why I think that this upside could be limited is because we have broken out from this triangle consolidation here, and we know that in such case we are in the final leg of this current rise that is on the rise from June 28th. So actually, I would not be surprised to see a reversal to the downside. It would be a different story if this would be some kind of an ABC setback, like a zigzag, then we could see much higher prices. But when you see a triangle, then normally this causes a final trust within current direction.
By the way, Greg, I know we already got past it, but there is a comment I want to make about crude, which I forgot to make before. We saw a huge rally in crude, like 18.5% higher within like 15 trading days. And we saw this move coinciding with dollar strength during many of those days. And we are currently seeing actually the exact opposite. We are seeing the dollar pulling back, and despite that, the crude being stuck, moving a little bit lower, being stuck. So what I'm trying to say here is that this is also another indication that the upside momentum for crude has definitely grinded to a halt, right? Or at least it has slowed down very much. And I do think that's, you know, another indication that crude is not far away from turning for at least a corrective move lower.
Yes, maybe we should also watch what Brent is doing. Okay, because oil is already at the highs, and what I see here is that Brent is still not at a new high, right? But this was a corrective movement to the downside. So from basic Elliott wave theory, this was a corrective decline.
Yeah. And from a simple basic technical analysis perspective, it looks like a very nice pennant. So also a corrective formation.
Yes. So maybe crude oil and Brent could find a top after we see also a completion of this current cycle that is unfolding, or I should say after we see a new high. Yes. So I think that there is a little bit more upside coming. Definitely supports are that I'm watching are much lower from current levels, and clearly we could be see some pullbacks normally because this previous move was very extended. So definitely watch out for lower floors before we may turn higher. Okay. Also, you talked
what about metals? Yeah, that's what I wanted to tell you. I mean, we've seen already a very nice outside white candle in gold, but it's not out of the woods yet for sure. From what I see here, you're viewing this as a corrective bounce, right? An ABC at the fourth wave.
Yes, but at the moment, let's forget that I'm tracking a corrective bounce. The idea is that I see more upside coming because, as you said yourself, we have seen a very strong reversal from a new low. The most important is probably that this reversal, which was impulsive, already took out the area of a former wave 4. So normally, when you see only first leg trading or breaking previous swings, which was of a wave 4, then this is probably one of the most important evidences that market is really going to see much further upside. Okay, because as you know, wave 4 is normally resistance after an ADC bounce. But if this wave 4 is broken with only one leg, then you can expect much more higher prices for an ADC rise. Okay, so actually this could also be something else, not only ADC rise, but the idea is that for the short term, I think that there is more upside coming. I think that we may see 1270. But on a daily, why I'm looking for potential to be this wave 4 is because I'm tracking a 5-wave decline in this wave C. Okay, so if I just label this, okay, if we consider all theory, all pieces of the puzzles, then definitely I would want to see more downside for wave C of wave D to complete this pattern. Okay, but as I said, after minimum 3-wave price, if we are starting to see we move close to this trend line resistance, then that would be indication that maybe we are already stepping into wave E. Okay, but for the short term, I think that there is more upside. For the next few sessions, we have, as I said, FOMC, then we have non-farm payrolls report tomorrow. I think that watch out for 1250 area down to 1245. This could be very interesting. If we see maybe this current intraday low taken out, then I would watch out for potential support a little bit lower.
Okay, very nice. Let's see if people have any questions, specific questions for you. Steve, Stel, maybe your thoughts on WTI later on. Yeah, we covered that. For Zach,
maybe I can take a look at the dollar again, because I think it's very interesting structure at the moment.
And not only very interesting, extremely choppy as well. I mean, so many people are trying to trade this, and it's been a nightmare to trade.
That's why Elliott wave is sometimes very useful, because it can show you the potential direction before major moves happen. So what I think about that is that actually from a recent reversal down, we can count 5 waves to the downside, okay? And now we are just slowing down, which is normal because of holidays yesterday, and also we will probably be slow till we get all of this data out. So probably we are seeing a corrective bounce, and I would not be surprised to see break beneath 110.25 support, which can cause very strong drop actually to the downside here. So I really would be aware of potential more weakness here, especially if stocks will also starting to see more downside. I can see.
Should I guess, that's what I want to say, because we have limited time. Lydia is going to be with us. Should I guess that means that you're looking for an extension lower, both in the S&P and the DAX? To tell you in advance, I do see the move higher from the 2690 S&P support as corrective so far. So, to be honest, despite remaining neutral as long as we're trapped below 2690 and 2740, the move higher in the S&P looks to me corrective. So that would actually make me inclined to be looking for another leg lower. So what do you think about that?
I think that, yes, we may see more weakness, but I'm expecting still a retest of higher prices. Prices to 750 is my resistance for current wave 2. Also, what I'm looking at is that maybe if I consider timing, okay, that we still have FOMC ahead and non-farm payrolls report, so maybe the real flows will show up tomorrow after the non-farm payrolls report, okay?
Very likely.
So I'm expecting some unclarity here that could continue and actually maybe form this into wave B triangle, and then we see spike to the upside where everyone will already try to maybe turn to the bullish side, but I would not be surprised if this would be only a temporary reaction, sharp reaction, yes, a trap to the upside after all data that will came out. So I'm still favoring more downside. Also, I can make a real quick look at NASDAQ. Now, some would say that here on the S&P 500, a decline is actually can be counted in in corrective manner as well, maybe like a WXY, okay? Because sometimes overlapping price action like this can be very tricky. But the idea is that you can have with other correlated markets. So for example, NASDAQ 100 was much better than S&P 500. So I want to take a look what NASDAQ 100 is doing. If we consider that NASDAQ 100 turned to the downside from a new high in a very strong impulsive manner, then we can expect that actually this market, which was stronger, is now turning to the downside. So obviously it means, or it confirms, that S&P 500, which was acting weaker than NASDAQ 100, will also continue to the downside, because clearly we have here waves 1, 2, 3, 4, 5. And the most important part of this structure is actually that the bounce that occurred was already been made by 3 waves. I don't know if we're maybe a retest of this high as a complex correction, but the idea is that, as I can see the upside, each leg that was very strong to the upside was very quickly reversed. Again, another strong to the upside, very quickly reversed to the downside. So I'm seeing evidences that bulls are not as strong, and that sooner or later we will see a next leg that will send prices on stocks to the downside. And this picture on the NASDAQ 100 suggests that we, after all, could be dealing with a leading diagonal in wave 1 and now wave 2 bounce here on the S&P 500. So that's why I highlighted Japanese yen. I think it could continue also to the upside. So dollar yen moving lower, and at the same time I would watch out some yen crosses. Now, if I will quick look at Aussie yen here.
Dale, do we have the time for that?
I will be real quick. Aussie yen, what I'm looking at on the hourly chart here is that we have a triangle here for wave B. So again, a corrective rise from the lows. The first resistance that I'm watching is at 82.20, and then a second one a little bit higher is around 82.70. Okay, so I'm expecting a failure breakout, break higher, and then watch out for potential reversal and shorts ahead.
Great review. Thank you, Grega.
A fast comment on the DAX as well, please, because a friend has asked since before. I was indicating that 12,100 is a very strong confluence of supports for the DAX. We have seen like quite a strong reaction from that area. In my opinion, the next area of resistance is at 12,600. But just in a sentence, what do you expect from the DAX?
On DAX, I see also consolidation, maybe now in a wave 4, completing this rise. What I see is that we had some gap here on June 25th, which has been now touched. So maybe we'll see a next reaction to the downside, but watch out for any extension to the upside to be limited, maybe at this higher gap, which is at 12,800. So still think that any rallies will prove corrective, and that we will see prices moving to the downside.
Thank you, Grega. Thank you.
Thank you, Grega.
Thank you.
Thank you, Steve.
Thank you, Dale. Enjoy the interview.
Okay, Lydia, thank you for your patience. Everyone at investing.com and regular face members, Lydia Finkley is my go-to person when it comes to the British pound and cable. So looking forward to hearing your voice, Lydia, and seeing what you're seeing here in cable. Hi, Lydia.
Good morning. Hey, Dale.
How are you?
Good. How are you? Thanks for having me back.
Oh, thanks so much for being here today. And looks like the dollar is finally taking a breather. So, you know, it's a great time to talk to you about what your views are, if this is going to be maybe just a real dramatic bear market rally in cable or something more significant. So go ahead and start wherever you want. If you want to start pound dollar, that's fine.
Okay, great. Yeah, let's start with cable. So, yeah, everyone's been watching this really steep downtrend the last 2 months. And I thought we would stop at the 50. You know, I like a 50% retracement, but even below that was these lows at 30, 50, and some of these former highs. And if you trade cable for any amount of time, you know that not just $1.30, but really $1.30.50, and that's kind of where we've seen this downtrend look to bottom out. So kind of drilling down into the 4-hour chart, looking at this bounce that we've been undertaking for the last, well, maybe week and a half, 2 weeks. All eyes right now are where we're currently at is $1.3260. I think that we've bottomed, and I think we're going to see a rally higher. But we have to get through some of these areas of resistance, and the big line for me really would be $1.3350. So I was watching that level on the way down. We broke that level, and that's when I got convinced that we would at least head, going back just to the weekly, we would head into this 50% line, and we did. You know, we broke 33.50, we got to 130, 180, and we obviously got lower than that. And when we got to $1.3050, I started to get wary, just because that's just a big level for cable, and it kind of on the way to $1.30, and after 2 months of a downtrend, I figured that that break of the 50 could be a bear trap, and so we've gotten this nice rally higher. Look for this, I think, to go a little bit further, and we want to see if pound can push above 133 and ultimately close again above 133.50. So we got a couple attempts back in June before we broke down further, and we want to see what happens on the upside.
Okay,
otherwise,
so above 350, Lydia, above 350 would take it to about what, 5.5, 36, because I want to bring it back to your previous chart and see what your thoughts are, because a lot of people are talking about the euro possibly putting in a head and shoulders formation. And if you look at, I think it was a daily you had up on the pound, maybe it wasn't, maybe it was a weekly.
Yeah.
Okay, all right, you see what happened on the left before we went to 141, and that's a support that it rallied to about 36.5 and pulled back to where we're bottoming now, and then made a new high, double top, that maybe we get a right shoulder, and if it had symmetry, could take it up to 136. What are your thoughts on that?
I like 136. I like 136. If we can get above 130, 350, I think we have a good chance of heading towards 136. And just to take it to the daily chart, that starts to retrace this whole entire downtrend. So we want to finally start to see a correction of this downtrend and taking us into 136.50. That's exactly where we would want to see what happens. I mean, I think that would be the test of the market.
Okay, great. So we're kind of on the same page that that's a possibility, and your trigger is going to be closes over 3.5 for that to become viable.
Yes, 33.50. Yep, exactly.
Okay, cool. All right. So what about crosses in here?
All right.
Still in the range.
The euro. So speaking of the euro, this hasn't been a fun one because it's just
it's like Groundhog Day.
Yeah, it's been range bound. It broke, back in March. It broke lower to 86.50, and then we ranged lower, which to me was an indication that we would break lower still. And what was been interesting is that when we had that bout of pound strength, we weren't moving lower, and then when the pound started to drop, we weren't really moving higher either. So we've been stuck in this range between 88 and 87.30, and we broke higher last week. And I didn't expect for it to go, full the train just to leave the tracks. No, what's typical after we break a range is that we get a retest of the range top, and we finally got that yesterday. And now we're looking at a bit of a bounce here. 88.50 has been the line I've been looking at for a long time. So when we're in this range, every time we extend the range, we always get resistance at 88.50. So that break finally got us above 88.50, but no real closes. And so watching today, as we bounce off of 88 and those range tops, we want to see if we can get back above 88.50. It looks to me like sellers are piling in here. So really what we're going to look at is we got Brexit news, I think, tomorrow. And then we're also going to want to see how the euro, or I guess how the dollar moves against the euro after non-farm payrolls. And that will kind of determine what we're going to get here out of the euro pound. But really, I mean, honestly, we could be stuck in a range higher.
Okay.
We could stuck with 88 as our bottom, and then we can
So
see what happens.
maybe one or two closes above 88.5 will be convincing for the upside.
For buyers to jump in there. I think that's what it would take.
Okay.
But we would have to be careful of ranges, because if we go back to the left, you see we were in a range between 89.50 and 88. So this one has been a ranged play for sure. If you want to practice your range trading, this one is the one.
Yeah, definitely. So I know that you weren't a big believer in the yen rally, or basically really yen weakness. So what's a guppy saying to you here? Similar situation that kind of looks like we're in a bear market and we're in a bear market rally phase, or what's your work saying here?
I think for this one, I think we are going to see. So the weekly chart looks like this practically on the rest of the crosses: the Kiwi, Aussie, Canadian dollar, where we're starting to work, where we're working out of a fib move. So I like the pound yen higher if it can get above 148. Right, 148 has been that line. I mean, really since last year, since the end of 2016. And when we drill down a bit, I think my daily will look better. Yeah. So we got this nice, again, another downtrend, and we bounced really into the fibs, held 148 as resistance, and we have this failed low. So in my work, when we see a failed low after a fib move, we tend to get a move higher than the corrective high. So this move that we're working on here, and it's been very choppy. Yen strength hasn't been, or weakness hasn't really been consistent despite what equities are doing. I expect a move really above 148, and a move. If we can break the 618, then I like a return to 156. Really.
So is a failed low synonymous with the fact that the market did not make a new low and put in a higher low? That's what you mean by a failed low at 44?
Correct. Right.
Okay.
Because in our fib, regular fib rules, once we correct into the fibs, we should get a new low. Well, in this case, a new low, right?
Okay. Got it.
Yes, we don't get that. We tend
just wanted people to understand it. Okay.
Okay. Great. Yeah. Yeah. So I like a move above 148 from here. I think that we've gotten, if you caught the dip earlier, closer to 145, you're in good shape. I think you would be chasing it now, especially ahead of 147 is kind of soft resistance ahead of 148. But I like this. I actually do like this higher if equities can get some traction. If we don't see the S&P in particular above 2,800, then I think that we see more yen strength pile in here, and we're going to see 148 hold again. So if you're in this long, look to take profits around 148 or headed into 148. It could be that we get another hold at that level.
Can I switch gears just quickly, and it's just an opinion? I know you follow all the developments there, fundamentals too. I know you're a great technician, but I know you also follow what's happening fundamentally there. Even though I don't know what the difference would be between a hard and a soft Brexit, which do you think is going to be the outcome for the UK?
I think a soft Brexit is what makes the most sense. And I think after 2 years of going through this, I think Theresa May, when she came into office, she was a hard Brexiter, right? She was like a clean cut, we're out of here. And as I think the political pressures and really the economic realities have kind of hit her desk, she's now pedaling for a soft Brexit. I actually think that's the outcome. I think, again, as the economic realities have hit, Great Britain doesn't want to leave the EU. I mean, why would you want to leave your biggest trading circle and all the amenities and accommodations that come with it? You don't want to do that. And they're starting to see that now. So I think a soft Brexit is what is now going to be pushed for, and we're going to get those news on. I guess we're supposed to get a little bit more news on that tomorrow. And I think anything that shows a soft Brexit being accepted by not just May, but also Parliament, I think we see the pound rally. So some of these weekly fibs could actually play out into some new highs.
Okay, so a soft divorce, even in marital issues, is a better way to go. What do you think? Huh? Work it
Always,
out,
Dale.
not be enemy.
Go
You
with
know,
the hard and fast separation.
yeah,
I mean,
yeah, and maybe when your spouse is, still has to co-parent with you. So any divorce, make it a soft divorce, right?
Right.
Okay.
Well, when
Anyway,
children are involved, you have to have a soft divorce.
how about against the commodity currencies? We're finally getting a pop, and they've been under pressure, all kinds of pressure because of China, potential trade war, and Aussie's been under pressure. But we're starting to get a little heartbeat in Kiwi today. So what's Lydia and Pinkley seeing in these?
Yeah, so same kind of weekly chart just to show that.
How orderly
But,
this one is.
Yeah, this one has been fun if you can catch the dips. It's been very, it's been really a lot of fun. So the Kiwi probably is taking the lead on weakness here with the RBNZ, Reserve Bank of New Zealand, coming out just last week, extremely dovish in the face of a lot of these other central banks being with hawkish sentiment. So we're seeing a little bit of a pullback off the new highs this week. And I think that this one just continues to move higher. And really with the Kiwi, it's a big contrast between the Reserve Central Bank sentiment and sentiment versus like the Federal Reserve or even the Bank of England, even the European Central Bank, which are all more hawkish than the RBNZ is going to be probably looking into the rest of the year into 2019. So I like any dips. For buying, and you can see this uptrend that we've been in has been a nice. It hasn't been a grind. We've got a nice move. We move a little bit, we correct into the fibs, we move to new highs, we correct into the fibs, we move to new. So that's exactly what we've been looking for. And today, or I should say this week, I guess this happened yesterday, we have a failed high. So here's a failed high where we just saw a failed low. This dip then, so this move then should take us into the fibs a bit more. So we want to see a dip.
Does pound Kiwi like 50% like cable does, or have you noticed it reacts more to 61.8?
It reacts more to 61.8 because the pound Kiwi can swing. I mean, this one can really swing. So it likes a 61.8, and even some of these fibs, like these are shorter fibs. I like to say they're shorter fibs, and when you see the Kiwi in particular reacting well to even these short fibs, you know that your trend is strong. So I like a move here into 194. It'd be some of these former tops that we've had before the breakout, this week's breakout. So I think that would be a great retest. If we see 194 holding, that's a great buy. And I think really Kiwi headed into 198.50 again. I've been looking for $2 on this one for quite some time, but we keep failing at 98.50. And I think this one could head right back to that resistance.
Close enough for government work, Lydia. Do you ever cover or pay attention to, someone asked me about it and I don't even have it on my watch list, pound Swiss?
I used to watch the pound Swiss even after they pulled the rug out from under the market with that peg. Yeah, I used to watch the pound Swiss, and it has some moves, but I really don't like trading against central banks. And so when central banks are really apparent in the market, I remove myself from that market. And the Swiss National Bank, I'm not sure about it. Maybe in the last couple of years, I really stopped trading the pound Swiss back in 2016, 15. They were just, they are active market manipulators. And the Bank of Japan, quite frankly, is right behind them. I think we have a failed low. Just to go back to the yen real quick, I think we have a failed low in the yen because I think the Bank of Japan is in the market and not wanting to see its currency strengthen with all the risk aversion, with the trade wars, with weakness in equities. I do think we see the Bank of Japan in there a bit, but that hasn't been reported. But the Swiss National Bank is very blatant and very brazen, and have I don't trade against.
Well, you
the
know what?
central
It
bank.
only takes one. You know, I mean, if you're a great cable U.S. pound dollar trader, you don't even have to trade the crosses.
Oh, absolutely, right?
You know, a lot of people think they have to be portfolio traders, but you know,
Exactly.
Lydia, I saw guys when I was on the floor in Chicago that never left one trading pit and knew one market like the back of their hand. So
Yeah,
really, all it takes is a few to pay attention to. And if
yeah.
you see
You need,
landmines, yeah, you know, delete it. Don't trade it.
exactly. Narrow your portfolio, narrow your watch list. I
Yeah.
mean, concentrated bets right now, are the way to go. It's just being discerning. It's just
Yeah.
really picking the best trades or with the best movements,
Yeah. So someone once told me if you don't remember the last price of whatever you trade, you're trading too many instruments.
I like that. Yeah,
Yeah.
that's
You
I,
can,
I like that a lot.
you could use it. It's not mine. I don't know whose it is. We'll give anonymous credit.
Great.
All right. Why don't you take us to your site, Lydia, and let the
Okay.
people know all the different things that you do. I know you're a Renaissance woman, so tell us about your business model.
So I also mentor and coach new traders or traders who feel like they need to get through the learning curve a bit faster. So I'm sure many of you listening to Dale and myself included, it took many, many years to get to a place where you're comfortable trading markets and you know which pairs you're going to trade and look for. I condensed that learning curve to 8 months with the beginning and intermediate course. And then students who want to stay on with me because they want the guidance, they like the one-on-one approach, they can go into the advanced. So that's Learn with Lydia. You can get a lot more about the coursework and the mentorship there with Learn with Lydia. I'm also a registered investment advisor as I help people with their portfolios, not just retirement, but also just looking to expand their portfolio with different asset classes and grow portfolios that way. I have Invest with Lydia. You can get more about my investment advisory work and the RIA I work with there. And follow me on Twitter at Faith Might. So my blog is Faith Might FX. You can catch some of my analysis there, but I really am a micro blogger. I love the tweeting and just posting a chart. And so you can catch me on Twitter at Faith Might. And at least try to post a chart a day with another commentary and things there too. So, to find out more about my work, it all begins and ends here on the blog, Faith Might FX. And I welcome your questions. I welcome your follows, and I'd like to work with you. So check me out.
Beautiful, Lydia. And thank you so much for sharing some real interesting levels on everything cable today. And I hope you and your mentees and your RIA has a great summer investing and trading season.
Thank you so much, Dale. Same to you and all of you. All
right, Lydia. Good hunting. Good luck on the NFP tomorrow. And thank you once again for being with us. All right, everyone. Lydia Idem Binkley, you know where to follow her, and her Twitter handle is @FaithMight. What a great handle, because you need faith for not just trading, but for everything in your life. So we'll see everyone for the NFP. We'll be here before the release. And don't just count your pips, count your blessings. Good luck the rest of the day. See you for NFP Friday. Adios. Thanks again, Lydia.